Good morning, everyone, and happy Wednesday. So we have a lot going on this morning. The market is looking pretty good after we had those monster earnings reports from Google and AMD. Google stock is just going absolutely crazy this morning. Tom, we're above $3,000 now. Of course, they're having that 20-for-1 stock split soon, and they have that special dividend as well, and their earnings were amazing. But yeah, Tom, this one is just going crazy, so we're definitely going to want to watch this one today.
Yeah, definitely. And like you said, it passed above $3,000, which is a pretty big level. And it actually even bounced on $3,000 right here in pre-market before market open. So maybe we'll see a bit of a resurgence out of Google. You know, sometimes these earnings plays slow down after they pop, like 10% in after hours like this. But I feel like Google has a pretty good chance to keep going. You know, they're a powerhouse, and it looks like they are bouncing on that $3,000 support now. So hopefully that ends up holding up intraday today. And as the market opens, I'd love to see it break out to new highs. Same thing with AMD. You know, they had pretty good earnings, but looks like AMD is kind of pointing to the downside here.
Yeah, so it's up 10% already, Tom, just from market open. So I feel like while looking at Google and AMD today, I think it's going to be really important not to get caught like buying the hype, if you know what I mean. Like, Google is up 10% today, and a lot of it has to do because of their good earnings, but a lot of it also has to do because of the hype with their stock split. And it's just really important to keep in mind that stock splits do not affect the company at all in terms of valuation, how the company works, or anything like that. Really, Apple and Tesla only ran up like a year and a half ago with their stock split because of hype.
Yeah, and actually the weird thing about the split is like they ran up a lot heading into that split, but then once the split actually happened, you can see that some of those stocks actually dipped down a little bit. So it's going to be interesting to see how Google does. And I would kind of expect a run up into that split as well. Kind of like how Apple and Tesla did. But once the split happens, I don't know, Mike, like I might look at it kind of to the downside, but it's just such a hard situation to look at. But like you said, lots of hype, and I'll definitely be looking at it to the upside, especially since we passed above $3,000. It looks like we might be falling back below that right now, but I'm really hoping that we can get back up above 3K at least sometime today.
Awesome. So I know that UPS was another one of those like crazy earnings plays from yesterday. And what are your thoughts on this one, considering how much it popped up yesterday? Like, obviously for the long term, they should be good. And I know it's really hard to predict some short-term movement, but what are your thoughts on this setup?
Yeah, I like it personally. I think it's pretty good. And while I don't think that UPS will necessarily explode today or tomorrow, I do feel like they still have potential to keep going up. But just keep in mind, kind of like what we saw with Apple and Google, or with AMD and Google, they UPS really gapped up. They had that nice like 14% uptrend yesterday. And I just feel like that they might start consolidating today a little bit, kind of like what we're seeing right now. They're down like 1.2, 1.3%, just consolidating. And I feel like they might do this for a couple of days before finally going back on that uptrend. I just feel like there has to be some type of slowdown after the stock runs up 20% and broke that high like that. And, we've seen it happen in the past where they have had gap ups and then kind of slowed down, but sometimes they just keep going. So we'll have to see what happens, but it's going to be interesting, Mike. And personally, I'm going to be eyeing it to the upside as long as we can break 233.70.
UPS isn't necessarily a stock like Apple or Microsoft or anything like that, but like if we continue to see the market itself explode up and have an awesome rebound, I'm sure that would help UPS. And at the same time, if the market really, really tanks down like we saw last week and the week before that, then I feel like that would also bring in that extra selling pressure, making it hard to break out.
Yeah, definitely. It's going to be a really tough one to look at here, especially after seeing Google and AMD pop. Like, if they start to consolidate a little bit, it might make the overall market consolidate too. We can see Google is now pretty far below $3,000, down to 29.77, kind of bouncing off that 100 SMA there. But yeah, I mean, it's not looking too good today at open, and we can see the SPY is just going really flat. It's kind of right around that closing price of yesterday, and we're just up very slightly this morning.
Awesome. Alrighty, so let's get right into these comments. So we have Mike saying, "Good morning, everyone. Am I the only one kicking myself for not buying the dip?" I'm sure you're not the only one, but to be fair, like we're not clear yet. Like I know we had an awesome recovery over like the past week, which is great to see. Like even Disney's popping up in an awesome way among many other companies. Tom, can you do me a favor and go to like the SPY's chart of March of 2020? Because I just want to demonstrate something really quickly. So in March of 2020, the SPY, it was brutal for the SPY, right? COVID first, I guess you can say, really started, and there's a bunch of panic and everything like that. But what's interesting to note is there was a pretty decent rebound early on the downtrend. Tom, right there. So right where Tom's cursor is, that shows you like we had a huge rebound in one of the quickest market drops in history. And then over the next couple weeks, the market continued to fall. So like while the market's doing really well this week, I don't want to say we're free and clear just yet.
Yeah, definitely. I feel like there could still be some weighing factors. And like we've been seeing this morning, Hunter was posting some pretty good numbers in the Discord, actually. And man, I was seeing some of these were pretty surprising. Like this one says the ADP jobs report disaster makes Friday even more intriguing. But don't worry, the employment rate won't change. And, we can just see that the employment rates are getting terrible. Like, I just can't believe some of the numbers that are coming out now. And like, for example, U.S. private payrolls fell by 301,000 for January versus the estimate for a 200,000 gain. Like, that's a pretty bad loss there. So I'm hoping that the overall market can end up holding up off of some of this bad news, Mike, because I just feel like we're just getting, I feel like bad news, like after bad news, like what do we have? We have Russia going on. We have inflation. We have rising rates. Now we have, bad payroll numbers. Like it's just like it just gets worse and worse right now financially. So we'll have to see how some of the stocks end up faring. And I'm really curious because I think that and during that next FOMC meeting, obviously they're probably going to really talk about raising rates. And that'll probably be like I figure the next one's going to be right around the beginning of March. So that might be when they end up raising rates too.
Yeah, so it should be interesting. The next FOMC meeting is March 16th. So we have a little bit of time with that one, a little over a month. So that should be interesting. But Tom, I remember in 2020, like obviously we saw some of the quickest drops we've ever seen, but we also saw some of the quickest increases we've ever seen across multiple different stocks. So we saw just a crazy volatility. Hold on, sorry, I just lost my point. What was I? Tom, I don't know what's going on. I just lost my point.
You were saying how the SPY back in 2020 dropped down, but then we had a ton of recoveries that happened very fast. And I brought up a chart of AMD just to kind of show how this one ended up recovering so fast from that March drop. Like, of course, they fell from $60 down to 37, but we can see within the next 6 months, they were all the way back up to $80 and then back up to 160 at highs here because some of these tech companies really benefited from that drop.
All right, I got it, Tom. So what I was going to say is you mentioned bad news, right, with just the market in the world right now. In 2020, obviously, we had a lot of bad news, but even when the market was recovering in one of the quickest ways it ever has recovered, we continued to see bad news. But the thing is, the Fed was continuing to pump the market. Now that the Feds are kind of stopping the pump, you can say, I'm very curious to see how the market will hold up by itself. When we looked at, what was it, Tom, like the rate hike cycle chart, I want to say on Monday's video, maybe Sunday's video, it showed that the market normally does pretty well even when the Feds are raising rates. So that's interesting to see. But the main point is that even though we had a lot of bad news towards the end of 2020 and even in the middle of 2020, the market continued to go up basically every week. So it's just a wild market, and I'm very curious to see how the market will change with the Feds stopping the pump, over the next couple months.
Yeah, you're right. That's a big point. The Fed stopping that pump is going to be huge. Like I know that they started tapering bond purchases. They even started talking about, Mike, actually selling some bonds back. So, I mean, we're going to see some pretty crazy movement probably. Obviously the rates affect stuff, but, that might have been getting priced in over the past few months. But I feel like that some of these bond purchases, and just the slowdown of everything with the Fed is going to really hurt the market. You know, like we're seeing, well, like you said, we've been seeing the SPY just straight up explode with them pumping bonds and just pumping everything. And it's going to be a pretty big slowdown when they finally do stop this. And I like how you mentioned 2020, Mike, because honestly, like I would have never expected the market to recover so quickly. Like 2020 was actually a green year on paper. Now, you know, I'm sure a lot of people lost because that market, I mean, you tanked from what, 339 on the SPY down to lows of like 218, and then you recovered and closed the year up above 375. Like, you're right, that was just such a crazy move. And that's probably because of that easy policy they had with pumping and everything like that going on. And now that that's stopping, you're right, it's going to be pretty scary over the next couple of months. And I'm not saying the market's going to crash, but you know, we've been seeing such crazy growth the past couple of years. Like, it's probably going to really slow down at least.
Yep, we shall see. Then we have Keisha saying, morning, we may get a nice pop on Pfizer today on news. So yeah, Pfizer's down like 1% so far. Of course, if any major news comes out, it can definitely move it. I will say though, looking at Pfizer's like chart, even like intraday and on the daily, I'm not a huge fan of this one.
Yeah, I'm not a big fan of it, especially intraday. Let's check out the daily. Yeah, actually on the daily, I'm not too big of a fan either. It kind of is like looks like a bit of like a head and shoulders pattern here. It formed this upper high, and I could honestly see it maybe filling some of these gaps down here, maybe like around like $45. So once we end up falling below 50, I'll definitely be more bearish on it. And yeah, it looks like it's turning over today. We do have those earnings coming up, but yeah, Keisha, if you know something we don't, and if you know some big news is going to come out, definitely let us know in the chat, because that would be awesome to see. But either way, though, you know, it's not looking too good here. We're down 0.89% today. And, you know, one thing to keep in mind is that Pfizer's been really doing well with all that vaccine news the past few months, and they might start to slow down too.
Yep. All right, we have George saying, damn, PayPal keeps tanking even more. Yeah, it's been a little rough for PayPal. Down 24%, Tom. 24%. So that is rough. They reported earnings yesterday and after hours. Their report was pretty mixed, but it was that weak guidance, Tom. The market definitely did not like that.
Yeah, it seems like every company lately is reporting some bad guidance for the longer term. Now, I know Google and AMD, of course, came in pretty good. You know, they're powerhouses. But as far as some of these beaten down companies like PayPal, you know, we even saw Netflix take a big drop with their guidance. And it's insane to see some of these bigger companies down 24%. Like we just saw it happen with Netflix a few weeks ago. Now we have PayPal flying through the 150 support. And yeah, look at this, Mike. PayPal is actually filling that gap on the daily chart. I know we talked about this a long time ago, and honestly, like we would have never thought that PayPal would be down to $125. So yeah, I mean, it's filling the gap, it's falling, and yeah, I don't know. I'm glad that they held up with that EPS, but that guidance definitely is not good for the next few quarters. But I still think PayPal can turn around in the longer term. It's just, man, it's definitely brutal in the short term.
Gotcha. Alrighty. And then we have Hunter saying, I want Square to fall below that I bought the tracker position at 104 and then it rocketed. Not exactly a tracker position, but a tiny amount to track it. Gotcha. Alrighty, there we go. Let's see. We have Max saying, how's Tesla doing after yesterday's recall? Let's see. Tesla it's technically down today, but when Tesla's down like 1.5%, like it's basically flat. So it's not really doing much.
Yeah, it's not doing anything really right now. It's actually kind of getting rejected at that resistance of yesterday, right around $950 again. You know, it went up in pre-market, touched like right around there, and now it's kind of falling off. There was some intraday support yesterday around 920. We actually just broke that to the downside, and you know, maybe we'll get to that low of yesterday, right around like 905. So it's definitely not looking too good today. I will say Tesla had such an explosive recovery, you know, to end the week last week and then on Monday, that I would almost expect a bit of consolidation, kind of like what we saw yesterday. But either way, it's not looking as explosive as traders were hoping. And honestly, I would just play the breakout here, Mike. Like if you break out above 950, I think that could make for a pretty good move. But you know, that breakout might not come today.
No doubt. All right, so we have Jerry saying, do you guys think Square is going back to 105? Let's take a look. So it's down 8%. Let's see, 105. I don't know, Tom. This one's kind of tough because we're seeing the market in a lot of growth stocks just have amazing rebounds. 100 is or I guess you could say 100 to 102 is a pretty big support. I mean, I can see it. Let me just pull up some of the probabilities on the options chain really quickly.
On Square?
Yeah, Square. So let me see. So I'm pulling up the probabilities. So we go touching. All right, so there is a 51.3% chance of Square touching 105 by February 18th. So that's a pretty decent chance for as low as 105 is. So, plus with Square moving the way it is right now, plus that PayPal negative sentiment. Yeah, I mean, I can see it, but if you're looking for a longer term position, maybe consider at least dollar cost averaging a little bit because we might not touch 105. And if you're looking at it for a longer position or a longer term position, you might miss the boat.
Yeah, definitely. That 100 support is going to be pretty big here. And we can see that over the past couple of weeks, we've touched off of $100 a couple of times. I mean, of course, it was like around 101.75, but still, though, we got pretty close to 100 here. And then we got some pretty good moves. So I would definitely eye up somewhere down there if you can. But like Mike said, I would definitely start averaging in here if you really like this company for the long term. That's a really big support. Now, that doesn't mean that, Square's going to get to their earnings over here on February 24th and bounce off of this. They could pull a PayPal and have a 20% down day and fall right through this. So just keep that in mind. But either way, if you like the company for the long term, I think it's at a really good price point right now. And even before PayPal fell, I thought they were at a pretty good price point. So I don't know. It's hard to look at some of these companies, Mike, with the way some are falling. But I do like the way Square's getting into crypto and stuff. And I think that'll be a really good way to expose yourself to crypto, especially if you're not somebody who currently buys Bitcoin or anything like that. Square could be a really good way to get some exposure to that type of market.
True. Alrighty, there we go. Let's see what else we have moving. We have Alex saying, any resistance levels to watch for WBA for a swing play? So let's take a look at this one. WBA. I would say there's a giant support right around like 49. It has bounced off that level multiple times in the past, and I guess you could even say there is some support right around 50 as well. I would also say there's a pretty big resistance right around 52. It has touched this level many times in the past, so 52 is the main resistance in my opinion. If we broke above 52, there's another major level right around 55. So, Tom, do you have any other levels I might have missed?
52 is going to be a big one, like you said. Like, honestly, just watch like right around 49 to 50 and then 52, like Mike said. That's going to be the main levels to look at right now. Like, I could honestly see this stock possibly like trading in a range between there for a couple of days. So definitely make it break out above 52. I feel like if you break 52, you could have a pretty safe shot up towards that $54 resistance. And if we start to fall below like 49, then I feel like we could have a pretty safe move down to 48 or then even maybe like $46 down there. So I think it just depends on which way it ends up breaking, but I would definitely eye this one to the upside. I feel like Walgreens has been doing pretty good lately, and the $50 support looks pretty good.
Yep. Alrighty. And then we have Keisha saying in regards to Pfizer that they just asked for FDA approval to okay COVID vaccines for children under 5, and then when is Pfizer earning? So I'm pretty sure that that Pfizer news was priced in. Like, I'm pretty sure that was priced in. But Pfizer's earnings are on February 8th before market open. So we still have a couple days.
Yeah, we do. And I'm really curious to see how Pfizer does here. They've been coming out with a ton of different vaccine news. I know that they came out with that new COVID pill a while ago that should be pretty revolutionary as far as the vaccine goes. So I'd hope that Pfizer can do pretty well. But, they've been popping up, it seems like, week after week here. So I would not be surprised if they ended up going down here in the shorter term.
Awesome. All right. I'm just looking through a couple different things right now to see some big movers today. Tom, looking at some of these growth plays, like we have Square, DraftKings, Zoom, and a couple
Oh
other
no.
stocks decently in the red. So, overall, they're up on the week, which is great to see. But still, I mean, it looks like we're definitely seeing some profit taking.
Yeah, it sucks when you see Zoom pulling back 3.6%. We have DraftKings down almost 5%. Like they almost exhausted their moves from yesterday. So yeah, definitely not looking the best. Let's look at like some 1 hour charts, maybe see if they like hit a bit of resistance or something. And it looks like DraftKings got pretty close to resistance. There was definitely some resistance at $24. Looks like we touched that and moved down there. Yeah, if we keep rising with DraftKings, I'll definitely be looking at that key $30 level that we were touching like a few weeks ago and continually bouncing off of. So as we start to rise, I'll eye that up. But yeah, definitely not good today, down 5%. And yeah, it's not even them. We have Spotify back down again after they were kind of popping back up this week. And I know Spotify has earnings tonight after close. That's going to be a really interesting one considering all that stuff going on with Joe Rogan and everything lately. I'm really curious on their guidance. Like they're a pretty big streaming service as far as music and podcasts and stuff go. So I'm really curious. And this one's also been really dipping down lately.
Yeah. Growth stocks are definitely pulling back today, which kind of sucks. But then again, it's been a good week. So I'm not going to complain too much just yet. It looks like even like AMD's pulling back though. Like when we first started the stream, it was up like 10%, and now it's only up like 6.5%. And ever since market open, it just seems like obviously there's been more selling pressure, but I feel like it doesn't quite have that like breakout type. Obviously, it doesn't have that breakout type movement, but I think this is kind of sending a signal across the overall market that, yeah, even though AMD had great earnings, maybe people aren't as enthusiastic to really continuously buy this one, as we can see.
Yeah, I mean, I feel like it's still a pretty good like company here, but either way, like I feel like that it's just slowing down. They were up 10% yesterday in last night's video. I kept saying time and time again that I really thought that AMD and Google might slow down after that huge move we saw, and it looks like it is playing out that way. At least at market open here, we're definitely seeing a bit of consolidation. And I feel like AMD, it honestly like had such a big rise here that we're right. Oh wow, we actually got right up to that resistance, right around like 130 to 132. So that looks like that was a pretty big resistance there. But yeah, I mean, I'm with you. I could see people kind of being hesitant with these stocks, but at the same time, I feel like that $100 level was so key. Like if you would have gotten it down there, I think it was just such a good price point to buy at, especially being such a key psychological level that it was. And it had a pretty good move with earnings, and we'll have to see how this one goes. It's been a powerhouse and it's continually went up. And honestly, if we fall below 100, I'll be pretty worried about it. But since we've stayed above it, I think that shows that there is some strength at least.
Yeah. Yeah, I mean, they're definitely a powerhouse company, and I bet that, the company will continue to grow. But yeah, it looks like the stock's just cooling down just a little bit. Hunter said you should pull up Spotify's chart and show what happens when you overpay for hype and growth. So yeah, let's take a look at it. Look at it. So Spotify is currently at $200. So if we look at like maybe like a 2-year chart. Yeah, 2-year chart, perfect. So we can see back in, I guess you can say like March of 2020, this stock was at $120. Obviously, when the pandemic hit and people started using Spotify more, and Spotify also had some pretty good news with like Joe Rogan's deal, and I know they signed a couple other people, and this stock was all the way up to $387, Tom. Since then, basically since like January of 2021, this stock has just been on a constant downtrend. And I think it just demonstrates the point that you can buy good companies and still lose. It really depends on the price you pay. Like it's not as simple as just buying and investing into good companies. It's important to look at valuations, and that's the same whether you're looking at Spotify or Intel or DraftKings or even Apple.
Yeah, it's so funny because like what have we heard since we were 5 years old? We've heard buy low, sell high. And then what does everybody do? They buy high and they sell low. They do the exact opposite. It's kind of kind of crazy to see how, how simple some things can be, yet sometimes people make it so difficult. But I definitely see what you're saying. It was such a crazy valuation whenever they were up there around like 350 to 387, and they really taught some people some lessons, and it's not just Spotify. Almost every growth stock has been really, I think, humbling a ton of traders over the past like few months. And yeah, it's really, I think, opened a lot of traders' eyes also to some of these fundamentals to look at. Also, like we talked about, some of these companies are doing pretty well. I know Spotify is not in the best financial position out of a lot of companies, but we've seen even stocks like Zoom, for example, they're at 150 and they were at 588. Like, now talk about a drop. Like, this one's down way more. Like, it's just insane to see how much some of these stocks have been falling with these valuations. And with Zoom, they even have a good EPS, good revenue, everything like that. I know Spotify is a little shaky there, but yeah, I mean, Zoom even had great numbers and they're down even more than Spotify.
Yeah. And I was just looking at Spotify's fundamentals, and their revenue is constantly growing. They're in the green with their cash flow. Their assets are constantly increasing. Even quarter by quarter, like their revenue is constantly increasing. Their price to sales ratio is around like 3.5 right now. So it's like their fundamentals aren't bad, but kind of like you said, like even with Zoom, like their fundamentals are pretty dang good, and they continue to fall. And part of it comes down to the price that you pay. Like you can't be paying like a 200 to 1 price to sales ratio on a company. Like even if you think that it's going to grow a ton, it's like sometimes you just got to take a look at the valuation. But yeah, either way, it's been a wild ride.
Yeah, it really has. And, honestly, like as Spotify starts to fall here, Mike, like I know they have earnings coming out later tonight and it's going to get pretty volatile. Like as far as Spotify goes, like would you say that this is a decent price point to pick this one up at? We're right around this $200 level. We have earnings coming up later tonight. Let's just say if you want to pick it up in a few days, like, do you think somewhere around 200 is good on this one? Or do you think like we should wait maybe for another fall back down towards, maybe 165 or then maybe like 150 down here? It looks like there's a huge support at like 150.
Yeah, so I like it for the long term at this price. Does this mean it's the bottom? Absolutely not. The market's been wild, and Spotify can definitely fall more given current news and even rising rates. I do like it for the long term. Is it my favorite position / stock? No, but I do like it. Like I said, it's not my favorite play. I do like it at this level, but if you do want to get into it, dollar cost averaging would definitely be the way to go. Basically, just buying in slowly over time.
Yeah, that's definitely the best way. And like let's say I had $5,000, I might buy like a couple $100 every week until I get to 5,000, or maybe 1,000 a week until I get to 5,000. Whatever you decide to do, but that would definitely be the way I do it too, Mike. And with them having earnings later, they've been having a lot of controversy with Joe Rogan and stuff like that. I wonder if they're going to maybe take a bit of a hit on their guidance because, I've been seeing some boycotts and stuff like that. And if they announce that maybe they're expecting some, maybe some lower subscriber growth or something, that could end up maybe making their stock fall. And I'd hate to try to guess this one, but look, we've seen Netflix fall 23%. We just saw PayPal fall down 20%. Like, man, is Spotify next? Like, I'm kind of worried about it.
Yeah, that's true. I know what you mean for sure. So yeah, we'll definitely have to pay attention to the earnings when they come out. But let's see. We have Johnny saying thoughts on Coin and Unity for long-term shares. I like them at these levels, but they're not my favorite plays by any means. I like so many companies a lot more. Like I like companies a lot more than I like Unity and Coinbase. My concern for Coinbase specifically is like what makes them unique. Like I feel like they're in an industry that is growing at a crazy pace, and that's awesome. That's a huge asset to have. But like I feel like there are so many competitors nowadays to Coinbase, and I've heard that their fees are pretty rough, and I've heard that some users say that their user experience isn't the best. Either way, they're growing at a crazy pace, and that's awesome to see. But like, there are so many different crypto trading platforms nowadays, and like, I might be wrong with this, but like, I think you can even buy like Bitcoin and cryptos on like Cash App. I don't know.
Yeah, I believe you can. Like I actually have some friends that's how they buy crypto actually is using things like Cash App and there's a few other apps that are very similar to Cash App that you can do it on as well. And it's definitely a big player there. And you're right, that makes a pretty big difference. I know that Coinbase can be pretty big for people looking to get into some of those altcoins, but either way, like we've been seeing Robinhood also slow down, Mike, and I feel like that Coinbase, they're not 100% like Robinhood, but whenever we see the trading volatility slow as we have over the past year, ever since GameStop happened, it definitely hurts companies like Hood and Coinbase because they're not getting that type of revenue and they're not able to sell as much data as they were. There's so many different factors that are going to affect these companies when the volatility slows down, and I feel like that's going to really affect Coinbase, but I feel like Coinbase will start to recover eventually, Mike. It's just, I feel like this one's going to be a really long-term play. Like, this one might be like a couple-year hold, like at minimum. So I feel like Coinbase will be good. And I like Unity personally, Mike. They're in that gaming sector. They make a lot of video games and stuff like that. They do have earnings coming up tomorrow, but yeah, I mean, they're in that gaming industry. I like this one a little bit better than Coinbase in my opinion, but I definitely see what you mean. Both are beaten down and they're both in that like growth sector that have just it's just been really lagging behind. Like if we look at Unity, it almost looks like AFRM or UPST on the chart.
Yeah, for sure. It's been wild, and I really, really like the esports industry or anything to do with gaming. So, previously Activision before Microsoft announced their buyout intentions, but like even EA, TTWO, Corsair, Logitech, things like that, I'm very bullish on, and I think that the fact that Microsoft is set to buy Activision, I think that's a giant, not a warning, but it's a giant message across the market that the gaming industry has a lot of room to grow, and considering that Microsoft is straight up completely set to buy out Activision. Like I said, I think that's sending like a pretty big sign that some of the big money is flowing into that industry. So long story short, I do like it, and I would expect Unity to benefit from just their industry growing. So that's always good to see. But Tom, like I know I already covered like EA, TTWO, ATV, Logitech, and Corsair. But like when you think of the gaming industry, are there any other companies like that come to your mind?
As far as like the gaming industry, a lot of them are private, which sucks. I'd love to see more of them be on the public market to be tradable. But one that really comes to my mind is Roblox. Like we look at Roblox, they've been a pretty hyped up stock. We've seen Nancy Pelosi buying some options on this one, and whenever I personally, like, Roblox has never been my favorite, but I'll be honest, like as we've been researching this one over the past few months, Mike, I've been seeing some pretty good numbers with Roblox, like really good monthly active user numbers, really good subscriber rates. Just they've even had deals with like Gucci, I believe, and like Louis Vuitton to like add some of their items into their game and stuff. So it's pretty crazy to see that they've been making some deals like that. And you wouldn't expect that for a company like Roblox, and they're kind of in that gaming sector. And I feel like that they've been beaten down a lot. They're at a pretty good price point. Does this mean it's the bottom? No, but I feel like this one's a pretty big one that we kind of forgot about. And, there's a few companies out there that are kind of like Unity that make games, but the main ones are honestly like Activision and EA. Like those two are huge.
Gotcha. All right, cool. So I'm just going to keep that on my radar because I was just looking at like different electronic gaming stocks on FinViz, and of course we have ATV, Roblox, EA, TTWO. We also have SE, which is a company from Singapore that's been doing very well lately, or not lately.
Limited?
Yeah. So it's been doing very well, but not lately. So
What
maybe
do they
I'll sell
make?
some puts on this one.
I'm gonna actually look up some games that they make. Let's see.
I know they have a
This is going to
lot.
be interesting.
I know they have a lot to do with like internet and all
Oh, it
that
looks like they
too.
make a lot of mobile games.
Gotcha, gotcha. So,
Oh, they make the mobile PUBG, I think.
hmm, interesting. Yeah, I'm not too familiar with what games they make. Also, like there's like BILI, which is a China gaming company. There's even like Tencent, like TCEHY. That one's pretty good too. But then
Yeah, you're
again,
right. That's a big one.
yeah, so that one's pretty good. Um, I do like this one for the long term. Like with all the China stuff that's been going on, I feel like it's kind of not discounted, but like it's definitely trading at a decent level.
Yeah, actually, TCEHY is really low. I cannot believe how low this one is. I will say though, is this one a China stock?
Yes.
Okay, I that's probably why, we've seen China stocks go all over the place, but I will say this one's holding up very well. It's straddling that 1,000 SMA. It's bouncing a ton around that $55 support, and then it's holding up at $60 very well too. I really like this one, Mike, and we all know that Tencent is pretty big. They make what, like League of Legends and games like that. It's pretty insane to see all the stuff that they do and how low this stock is. So you're right. I'll definitely be eyeing up this one. And I really like this, to be honest, Mike. Like, I think if you like the gaming industry, Tencent could be a pretty good pickup down here.
There we go. We have Ant saying PayPal is crushing my. I think he meant to say portfolio. I'm down 300. I was down only $15 this time yesterday. But yeah, I mean, let it serve as a lesson to not play earnings. I mean, the good thing is that you have shares, so you should be fine for the long term. But earnings can bring in a lot of volatility. A lot of volatility. The good news is that you have shares. A lot of people just YOLO into options right before earnings, but since you do have shares, if you just hold, you should be good over the long term.
Yeah, and I think that PayPal will be one of those companies that ends up coming back pretty well. Of course they're getting beaten down now and they have bad guidance over the next, few sectors or few quarters, I should say, but looking at them, I feel like they'll be pretty good for the long term. They're a pretty established company. I don't see them going anywhere. Same thing with like Square, same thing with some of these other financial companies. Like they're pretty established and I don't see them just falling off the table anytime soon.
Gotcha. All right, we have Vicky saying hit the like. So yeah, if you guys like the stream, it would mean so much to us if you could smash that like button. It takes like 2 seconds, and we'd greatly, greatly appreciate it. But then we have Johnny saying, thanks guys, I sold a put for PayPal at the 180 strike for February 11th. Wondering if I should just leave it alone for now. I am down quite a bit. So he said the 180 strike for February 11th. Let me take a look at this one. So yeah, wow, 180 is pretty far up there. So what you can do if you wanted, so he has February 11th. Let me just take a look at this chain. So if you were to buy back the 180 strike put, and like let's say you went out to March and you sold that 180 strike put, dang, you'd only get a credit of like around $28. Let me just check this really quick. So 48, yeah. All right, so I mean, one option that you can do, Johnny, is if you hold this 180 strike put for too long, like let's say next week goes by and let's say it's like Wednesday, if you're still holding that, you might get assigned early because of how deep in the money that put is. So if you don't want to get assigned shares, what you can do is you can buy back the 180 strike put for your expiration date, and then you could simultaneously go to the March 18th expiration and sell to open that 180 strike put. You'll collect a very small additional premium, maybe like $30 to $50 depending on where the stock price and implied volatility is. And then that'll just give you more time. You can just keep rolling out and rolling out and rolling out in order to, one, gain some extra income, but also, I guess you can say, reduce your capital requirement because then you won't be required to buy that 100 shares.
Yeah, definitely. And whenever I'm looking at this, Mike, like I think that's going to have to be the strategy he uses because I mean, unfortunately, he got, you did get a little bit burned on the earnings, and that is unfortunate. So you'll probably have to roll it out unless you're, okay with getting those shares at 180. And personally, I would probably just keep rolling it out like Mike said, because yeah, I just don't like the way it's moving now. And obviously you don't want to grab shares at 180 right now.
And the cool thing too is like you can like retain your initial exposure by, I guess you can say, shorting puts and having like a upside bias on it if you continue to roll out. And with implied volatility moving the way it is, the higher that goes, the better for you, because essentially implied volatility, it affects longer dated options more than the shorter dated options. So if you were to sell to open a longer dated option, in this example it's the March expiration, and you were to buy back the shorter dated option, rising implied volatility helps you because you'll collect more and more premium each time, and it increases the difference between the two put options because of their expiration date. So long story short, I would definitely consider rolling it out. You'll basically have the same exposure that you have now, and you'll just collect like an extra maybe $25 to $50 depending on the option price. But yeah, I mean, it's a good lesson. Most of the time we do not see a company's stock fall down 24% in a day, but earnings are crazy and it's been a very wild market.
Yeah, and I will say that, well, just like how you're getting kind of caught in this position with PayPal, there's been plenty of times over the past, 6 to 8 months where this has happened to me. It's happened to a lot of other traders too. So, there's been plenty of times where it's obviously seemed like a lot of these stocks were forming good supports or they were at great buying opportunities, but they just kept going lower. And, we've seen it with DraftKings. We've seen it with PayPal. It's happened with Zoom. Like it's been happening a lot lately to a lot of people. Even I'm sure it's even happening to a lot of big institutions, Mike. That's probably why we're seeing so much volume coming across some of these call options, or some of these put options, I should say. But either way, I mean, it's pretty crazy to see how much some of these stocks keep going down. And one thing I will say, the good news is it's not just PayPal. We're seeing a lot of other companies make the similar moves like Zoom, Coinbase, you name it. Like pretty much all the growth stocks have been moving in sympathy.
Yep. Alrighty. And then we have Alex saying, with SPY broken out of the range it's been in, what levels to watch for now? So Tom, what levels do you have for us?
Yeah, SPY is actually doing pretty decent today. Like it's popping back up to this resistance that I have posted right around 456. That's definitely going to be a pretty big level to look at intraday today. It's bounced pretty close to that a few times. So if we can break back up above like 456, maybe 456.50, I'll definitely look at this one back to the upside today with the SPY. And I would think that we could end up breaking out above that 457.43 high there. But if we don't break this right here, the SPY might start trickling back down. And the main thing I'm going to be looking at, Mike, is I think some of these big stocks like Apple, Microsoft, stocks like that, like if we see Apple break out above this daily high here and keep running up, I think that it'll have a pretty good chance to maybe start pushing some of these other stocks up. And look at Microsoft. It's actually breaking out right now. So I feel like with these stocks going up, the SPY might start to break out here pretty soon. And it's always good to see these big market movers kind of up like this. Over the past couple of days, they've been all over the place. So hopefully it pushes the market up.
AMD's coming back too. They're now up almost 9% and they're trying to come back. So that's good to see. And I really have not been watching Microsoft too much lately, but Tom, that's having a day.
It really is. It broke that resistance this week right around like 312 there. It's all the way up to 315. Like it's a pretty explosive breakout. And honestly, it was holding on some of these supports like right around 305 pretty well throughout the week too. Like it's been moving very well off of technicals.
Awesome. All right, we have Easy Rider Danger saying Starbucks would have been a good recovery play this morning. Yeah, you're 100% right. That thing just blasted right when it hit that level at 94 in after hours yesterday, but it also blasted right at open off of that support at 96, and it's coming right back up. So that's good to see. Tom, on the daily chart, it looks like Starbucks is kind of consolidating and it's really trying to hold this level. So with this one, like I'm really going to watch it. If we continue to fall more, I'd probably sell some puts on it just for like a longer term play. And maybe if we don't hold this like $95 support or like maybe like $93 support, maybe I'd look at like a short position on it, but probably not.
Yeah, like if we do break this, it might be good for like a play, like you said, maybe like a quick in and out day trade, maybe if it breaks that to the downside, or maybe just like a couple day hold. But like you said, I would really eye up some puts too, or I should say eyeing up shorting puts because I've been looking to get into Starbucks for a long time, Mike. Like we always talk about, like if you go to Starbucks, it seems like it's always packed. There's a line around the building, and you'd think that this company just can't go out of business anytime soon. And that's not going to happen. But either way, like looking at their stock, I think it's a good price point to buy. I am seeing a pretty big support down around $90 that I wouldn't be surprised if they ended up touching with the way we fell through 100. But either way, I think averaging in here is a good way to go. They pay a decent dividend at least. And I really like this one for the long term, Mike. Like I don't see him going anywhere, and I see him growing at quite a good rate.
Yeah, like it's crazy. Like I don't think I've ever been to a Starbucks where I was the only person there. Like there is minimum at least a couple people there every time, and most of the time it's packed, and I'm waiting in line for probably like 10 minutes. But either way, like their fundamentals look pretty decent. They've been growing their revenue continuously, with the exception of 2020. But then again, that was with the pandemic, so you can't really like hold that against them going forward. Their price to sales ratio is like 3.8, which isn't bad. Cash flow is pretty good. I mean, they're looking pretty good, So I don't know, Tom. Maybe I'll make a video on this one on the main channel for like a potential play. But I don't know. I mean, looking at the chart though, I just probably would want to get it a little bit lower than its current price, obviously. And I'd probably just sell a put until I get assigned shares. They also report a dividend, which is pretty good too.
Yeah, that's going to be good at least for holding it for the long term. And they are right on that support around $94, like you said. So if they do hold this, it will be a pretty good dip buy. And I feel like right now at this price, averaging in will be pretty good. Maybe if you have like a $5,000 position, maybe getting in for like $500, maybe like 10% of your overall position wouldn't be terrible here. That way, if it falls to 90 or 80, you might be able to get yourself averaged in maybe, around like 86 or maybe somewhere around like 90 if that does happen.
Alrighty. Then we have Keisha saying, what do you guys think of JD and Baidu? The setup looks really nice. I like them. I really do like them. I will say I like Alibaba and Tencent more, though. That's just from my research. But at the end of the day, these companies basically all move the same way. So Tencent, like Tom has pulled up, they are really big in China. And I know they're pretty big, especially in gaming, which I know is pretty big in China. And that industry is just growing so much. And it's definitely an industry that I want to have exposure to over the next 5 to 10 years.
Yeah, and earlier, whenever I was talking about C Limited, by the way, like whenever I said they make PUBG Mobile, I meant to say they make an exact copy of PUBG Mobile called Free Fire, but it's pretty much the same exact game. Tencent is the one who makes PUBG Mobile and also the regular PUBG. So yeah, Tencent's going to be huge. And like we've been seeing, that industry has been growing constantly, Mike. And I love the way Tencent's looking on the chart with some of these overall support levels and stuff. It's just bouncing down here and consolidating in such a good way, especially compared to some of these other China stocks. Like we can look at like Baba, they've been continually breaking lows and going continually lower. But whenever we look at TCEHY, they've been kind of holding their ground around $55. And it's just been nice to see them at least holding up. They kind of almost look like JD or Baidu with the way they've been holding up better.
Tom, look at Tencent on the dashboard.
Oh my gosh. I'm probably going to see the craziest growth I've ever seen over the past 3 years.
I mean, it's pretty good.
TCEHY. Yeah. Man, I know that China market is huge. Like what is there? 3 billion people? Oh my gosh, Mike. Yeah. This is insane to see. Wow, look at the total assets versus liability chart. Like I don't think I've seen a company with this type of growth.
Yeah, it's pretty insane. So they're growing at an insane rate, to say the least, and I think they're going to be pretty good for the next couple of years.
Well, I'm definitely picking some shares up of this one right after the stream, I think, actually.
There we
Wow.
go.
I mean, I'm not saying everyone should go out there and just go all in on this company, but wow, I think it's looking pretty good here.
Jerry goes, I'm all in.
Oh man, right as I said that.
Oh gosh. But I mean, guys, to be fair, there are some risks with this company. Well, there's actually a lot of risks, but it is
Yeah.
a China company. Any tensions between the U.S. and China obviously would not be good for this company. Another really, really, really important thing to keep in mind is that China companies historically have lied about their numbers. So it's like, yes, we are seeing crazy growth. So keep in mind there is a chance that these numbers can be fake. Like, just one thing to keep in mind, I'm not saying Tencent is faking their numbers, but China has done that before. So definitely just keep that in the back of your head. And Vicky said, which one are you guys talking about? We're talking about Tencent. TCEHY.
Yeah, we can see on the chart, it's been consolidating a lot down here. I feel like it'll be a good pickup, Mike, but like you said, it does come with some crazy risks. You know, you have the risk of China, of course, and then they are, you know, the makers of that PUBG game. And I will say, you know, PUBG's been out for a while. Like if that starts to slow down, it could end up hurting Tencent. But to be honest, Mike, like with the way that we're seeing that growth and with how low of a price Tencent stock is, like it just seems like a really good price point to pick some up. And I will say, like, even if you like companies like EA and companies like that, like Tencent's just at such a better price point right now. Like you're getting a company around $62 that had highs of $99, you know, back in February of last year. But it's crazy to see that like how much of a dip they've had with some of these growth stocks and how much growth they've had. Because, you know, some of these growth stocks have slowed down a little bit, but man, you're right. Hopefully those numbers are accurate.
Yep. Alrighty. And then we have Jerry saying, can you look up pins for me, please? I'm playing their earnings tomorrow. Would love to know what to expect from previous earnings. So, Tom, I actually want to... Ah, dang. There's actually a really, really cool tool that Thinkorswim has. I don't know if it's possible for you to pull up the main chart on Thinkorswim. If not, that's okay. Let me just see if I could pull this up. Let's see.
It's possible if it'll just take me a second to get the margins correct, but I can pull it up.
Okay, perfect. I just want to get this. Okay, perfect. So, yeah, just whenever you're ready, Tom. Perfect. Alrighty. So, Jerry, I think you use Thinkorswim. So, this is actually accessible for you. So, Tom's getting us all set up now. So,
all right.
Here we go. Alrighty. So, Tom, if you could head over to the Analyze tab on the top, and then from there, if you could head over to the Earnings tab all the way to the right, yep, and then type in Pinterest, or P-I-N-S, we can see how their stock did on basically every single recent earnings report. We can see what the candlesticks looked like, and like, what is it, like the first 5 days before the report and the first 5 days after it. We can see the implied versus historical volatility, and more importantly, we can see like how the at-the-money straddle performed. This basically shows you how the options did, and then on top of that, you can see how their EPS was, how it was compared to the estimates. So it's like a really, really useful tool, and I never see anyone use it.
Yeah, this is actually really interesting. I've never used it personally, but you know, honestly, I haven't played earnings in a few years, so it's been a long time since I've tried to play earnings. But it's very interesting, Mike, to see how those straddles have played out. I know straddles almost never work with earnings, and I know that we get quite a few questions actually of people asking about doing straddles before earnings, and we can see it almost never works out, at least in Pinterest's case. But that's very interesting, Mike. Like, look at all these comparisons. Sometimes, you know, it seems like we see Pinterest either gap up or gap down with earnings, and like we talk about, it almost seems like a coin flip here.
Oh, yeah. So, yeah, hopefully this was helpful, Jerry. Tom, I don't know if you have any other insight in regard to Pinterest earnings. Like, I know Pinterest is it's volatile, and earnings are always 50-50, so I don't know how much more info there is to add.
Yeah, I mean, you know, Pinterest, they're in that online sector. I will say just be really careful with them. I know that they were going to get bought out by PayPal a while ago, and then the deal fell through. And whenever that happened, I mean, Pinterest stock just got, I mean, it pretty much got destroyed. It fell from around 50. It fell below $50. We're all the way down to $28 now. It almost fell 50%, to be honest, from that, just from that one circumstance. But it's pretty insane to see how low it's been. And personally, it kind of reminds me of like a PayPal or something, Mike. It's not looking good lately, and I feel like that it could end up having a bad earnings report. We've been seeing some powerhouses like Google, AMD, Microsoft, companies like Apple reporting pretty good earnings, and they've done decent. But whenever we look at some companies like Pinterest, PayPal, some of these beaten down companies, like they've been reporting some pretty bad numbers. So hopefully we see Pinterest come in and beat earnings and have good guidance, but I just don't see it right now given everything else we're seeing.
There we go. Alrighty, so great question, Jerry. Alex said, could you maybe do a video on this in the future? Absolutely. I actually just added it to my notes right when you asked that question. So absolutely, I have that in the works. We have Ironical saying, what happens for options in splitting share of a company? So great question. So whenever there are major corporate events like splits, mergers, special dividends, anything like that, the options become what are called non-standard options. A non-standard option can be different depending on what the event is like. Since this split is so new, I don't have specifics on how Google's options will be affected, but a lot of times, or well, every time, the exchange just adjusts the option for you. So basically, like one example is like, let's say in your traditional option, let's say you were to buy the 3,000 strike call that expires in January 20th of 2023. What might happen, or in a normal environment, that would represent 100 shares at $3,000 each. When it gets adjusted, like an example would be like, it might only represent like 8 shares of Google, or it might like, instead of being the 3,000 strike price, it might be shifted down to the, I don't know, Tom, like the 180 strike price. Like it just adjusts automatically. So the main thing to know is that your option will be adjusted automatically, but non-standard options are kind of weird in the sense that sometimes it's very hard to trade them because of their liquidity problems, especially on a company like Google whose options are so expensive. And yeah, like your strike price and shares will most likely be affected. So definitely keep that in mind. And then I actually want to pull up one more thing, Tom, because with the next comment, we have W saying, when is the Google stock split will be in effect? And I actually made a post on the main channel covering this. So let me pull it up right now. Give me 1 second. So the Google stock split will go into effect on July 1st. So if you if you own shares at close on July 1st, you will be a part of the split. The split is actually set to happen on July 15th. So July 15th is the main day, but it's kind of like you have to own the shares on July 1st if you want to be a part of the split, but it doesn't really matter if you're a part of the split or not.
Yeah, I mean, it won't be too big of a difference because it doesn't really change anything. Obviously it creates some hype, like generating from the split and heading into the split and then after the split, it's going to obviously affect some hype. But, like if you have $3,000 and you want to buy Google, you're either going to buy one share for $3,000 now and then let it turn into, 20 shares, or you're going to buy 20 shares at a way lower price. So like you said, Mike, it doesn't really change too much as far as the valuation of the stock or the company. It just changes, the overall. It almost just changes the overall appearance, like you're looking at a $3,000 stock soon. What's it going to be after the split, Mike? Somewhere like
150.
150. So yeah, you're going to be looking at $150, and it might bring in some more volatility and stuff like that too, which might be good for Google. They've been growing a lot anyways, but obviously when it's lower, more traders can buy them. You'll have more volatility, but it's not really going to affect too much. And honestly, I would just probably, it's hard to say, Mike, like, would you get shares heading into the split, or like if you were going to get shares, would you get them after? Like personally, I mean, I'd want to get them before the split if I could get them at a low enough price.
Yeah, it's like, I think you have to make a decision of whether or not you want to play the hype. Like with Apple and Tesla, they ran up with their split news for a while, and there was a lot of hype that went along with it. So it's like, if you're looking for like a quick flip, then yeah, you'd probably want to get the shares before the split, or maybe even in a couple weeks or something like that. But then again, like another thing to keep in mind with Apple and Tesla split is they split in like the middle of one of the strongest bull runs we've ever seen. So it's like, now that the market is kind of slowing down, like you kind of have to wonder, like, are we really going to see the run up out of Google that we saw out of Apple and Tesla? Because I'll say it right now, like Google doesn't have the hype that Tesla and Apple have, So it's like, part of me wonders, like, if we're actually going to see the same type of hype that we saw with Apple and Tesla. And I don't think so. Like, I'm sure we'll see hype running into the split, but I just don't think it's going to be the same.
Yeah, I don't either. It's like you said, Tesla has a lot of backing from not just institutions, but tons of even retail traders. And I know whenever Tesla was starting to run, Wall Street Bets was getting on board. There were tons of big groups that were kind of hyping up Tesla. And same thing with Apple. But you're right. I mean, I think Google does lack a little bit as far as the hype goes, and I feel like them being $3,000 is part of the reason. Like if they were a little bit lower, I feel like it could be obviously a lot more hype worthy, I guess you could say. What do people love? They love seeing stocks like AMC going from $1 to $70. They don't like seeing a stock go from $1,800 to $3,000. So I definitely see what you mean, Mike. And I will say it looks like Google, they did kind of break their all-time high as they, ran up yesterday, but it looks like they got really close also to a double top. So we'll have to be a little careful with this one.
Yep. Alrighty. And then we have Mike saying, oof, what happened to growth stocks? So they're definitely pulling back today. DraftKings is down like 5.5%, which sucks to see, but part of it is due to the crazy bounce we've seen over the past couple days. Tom just read my mind. He's getting up so even with DraftKings fall, it's up 28% from, what is that, Tom? Like Monday of last week. So it's like we are seeing some profit taking, but it's like when you bounce so much, like it's just like kind of like what happens. So yeah, we are just seeing a little bit of profit taking. There wasn't any like specific bad news with the growth plays right now. It's just a little bit of that profit taking.
Yeah, and we even saw it happen last week. We got that nice bounce off support Monday. We kind of consolidated that Tuesday, and then on Wednesday we exploded. And then on Thursday and Friday, we just kind of consolidated back down a little bit. And I feel like that we're just kind of in that consolidation phase again. We hit a big resistance at 24. We're just consolidating a little bit. We might fall down today and tomorrow, but honestly, I would expect maybe one of these supports to hold up around 21 or maybe even $20. And if they do, then we might be set for a pretty good rise again next week. And, it won't be too many. Like, for example, if we have some nice explosive movement like we had the beginning of this week or the beginning of last week, we'll be back up above $24 in no time.
There we go. So, Tom, do you have any last-minute plays or anything before we close the stream?
Man, today has just been pretty nuts. We didn't even really cover too many of the looming earnings plays for tonight, Mike. We have some pretty big ones coming up after close. We have Facebook reporting, or I should say Meta now. They've been they own Oculus Rift, which is those VR headsets, and they've had a lot of hype with the metaverse and everything lately. So that's going to be a big one. Qualcomm is in that semiconductor industry. We saw AMD do very well whenever they reported last night. Qualcomm is definitely not an AMD, but they're in that sector. They could end up doing pretty well. And then we have Spotify. We even have T-Mobile here in after hours. We haven't really talked about that one too much, but T-Mobile and AT&T are reporting pretty soon. And those they've been having some hype with 5G lately. I've been hearing some news of like rollouts and stuff like that.
Right, there we go. So thank you guys so much for joining the stream today. We had an awesome time, and before we close it, I just want to thank everyone personally. So thank you so much, Mike, Keisha, Ravi, Vicky, Hunter, Spacely, George, Max, Alex, Jerry, who else? Johnny, Kenny, Ant, let's see, Jesse, Easy, Sam, and Iranical, and W. So thank you guys so much for joining. We really appreciate all of you, and we hope you have an amazing rest of your day.